Interactive Brokers Chief Strategist Steve Sosnick and Invesco Global Market Strategist Brian Levitt both join me here on set. What a treat to have you here in the studio with me. Steve, I'm going to start with you. Have you been surprised by the market moves we've seen this week, especially given the geopolitical backdrop?
Yes and no. I mean, we didn't really react negatively to the geopolitics, Morgan, but we seem so it was sort of more of a speed bump than a real reason to sell off. And whatever doesn't kill this market makes it stronger. And so when oil stopped being a problem, something for us to worry about, then we can start to, everybody, please resume rally the time that you were involved in before.
I mean, it is pretty incredible, Brian, because stocks have climbed this wall of worry. We're just about 1% from an all-time high for the S&P, but very much range-bound. It really does not seem to want to break out here. What's the next catalyst?
I think the next catalyst is going to be some positive developments on the policy front. I think most of us expect that where we're going with tariffs will be incrementally better than what most had feared. We will see some legislation in Congress that could provide modest support to the economy. And ultimately, I would expect at some point the Federal Reserve to lower interest rates. So it's not an ideal macro backdrop. Things are slowing a bit here. But the market already paid attention to that, right? The market already went down 20% earlier this year, expecting this soft patch. From here, I would expect the economy to muddle through and then some policy support to lead us into next year.
So recession fears have come and gone then for this market?
For the most part, I mean, I don't know why I'm saying for the most part. If you were to look at corporate bond spreads where they are right now, you would have very little concern about recessions. In fact, they have tightened very significantly. So what we saw, really in early April with volatility spiking, credit spreads moved modestly from tights, never even got back to average. That's not consistent with a recession. Industrials performing well year to date. That's not consistent with a recession. Look, it's just not an over-levered, over-excess economy. So I suspect this goes on for some time.